Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to go over using Dividend.com and look for stocks that could be possibly trading now at a great valuation in comparison to the S&P 500, which is trading near all-time highs. This is a video I've been wanting to do for a while. I've seen a lot of investors out there looking for value in the market, and this video I'm going to go ahead and show you 13 stocks that have grown and paid out dividends for the past 25 years. They all seem like they are trading below their sort of range value for the year. They have a really good starting yield and a few other metrics here we'll take a look at, but that is what we're going to be covering in today's video. So if you are brand new to the channel, hit that subscribe button below. I do cover the stock market, dividends, entrepreneurship, real estate, personal finance. If you're interested in any of those topics, hit that subscribe button below. If you do enjoy this video, find it helpful, hit that thumbs up. And if you have any comments at all during the video, drop them in the comment section. If it's multiple questions, you come up with different questions throughout the video, drop them in the comment section. I always read and apply all the comments, and let's go ahead and get into it. So my starting process, when I'm looking for stocks out there that are out of value, I will go straight to Dividend.com. I will go and select their tools and their screener. They have a really good screener for getting all the stocks out there that have dividends, and then I'll be able to screen this down, and I'll show you 88 stocks is what we're starting with, and we're going to weed it down all the way to just 13. I already have the 13 already selected here, but I'm going to show you my process of how I got to these 13 stocks. So this is the Dividend.com dividend screener. Initially, there are 4,874 securities that are available here that pay out a dividend. Now, the very first thing here that I did is I went down into the advanced dividend screening tab, and I want to look for stocks that are recession proof. I want stocks currently in this market where we're at 9 years of having just growth. You know, every 8 to 12 years, we do go through a slow period where the market pulls back. And with the current valuations of the market, I want to sort of buy into dividend stocks, safety stocks, income stocks that while owning them, they will continue to, they may go down, yes, they will fall, they will recover, but over time, during that whole process of anywhere between 1 to 5 years, I will get a dividend payment paid to myself, and then I'll be able to buy back more shares of whatever other stocks I feel fit within the portfolio, basically increasing my dividend income, my shares of that company at a discounted price, and just overall increasing my initial yield cost on the specific stocks that I'm buying. So I want stocks that are trading with 25 years of dividend increases because these offer a bit of a safety play going into a possible recession in the next 1 to 2 years. Okay, so I'm not going to change anything here within the dividend payout frequency. I like quarterly, I like semi-annually, I like annually stocks. You know, it doesn't matter. I'll go ahead and include them here in the mix. And they're already including the 10-year increases, obviously, because we're looking at 25 years. So I'm going to go ahead and minimize the advanced dividend. Next, dropping it down into the price, which I'm not too worried about the price. I use M1 Finance for majority of my buys, so they offer me free stocks and ETF trades, so no big deal there with the share price. Annual dividend payout, not a big importance there. I could change the dividend yield to be anywhere below 7% for safety, but I would like to see just what's out there and available. And then the final one is the payout ratio. Now, going into a recession, I want there to be some wiggle room for these companies because generally companies do, when they go into a recession, they do have periods anywhere from 1 to 5 years where their earnings will slow down. If you look at all the major companies, Johnson & Johnson, Procter & Gamble, ADP, many others out there, they all go through a slowdown process where their earnings slows down, their revenue slows down. They may drop by 5 to 10% year after year, and it goes on for just a few years, and that will increase your payout ratio because they are bumping up the dividend payout during the downtrends, and their earnings are lower, increasing their overall payout ratio of their earnings to their shareholders. So we want that padding there. So I put in 60%. That way we have a 40% buffer there. Next, I go into the company basics. Now here, you can select small, which is 300 million to 2 billion. You can select your mid, you can select your large. I generally leave the market cap alone. The Dow 30, I want more than just the Dow 30 stocks in there. Qualified, I'll take them all. Now, qualified and non-qualified. The non-qualified, those are going to be a few of your real estate investment trusts, your MLPs, your limited partnerships here. So here we can show just a few examples here. Tanger Factory Outlet, Universal Health Realty Income Trust, Medtronic, and so on. So I'm going to go ahead and just leave the qualified on there because inside of a Roth IRA, which I'm using primarily for my buys, I don't have to worry about paying taxes. But if they are an MLP, multi-limited, I forgot what the acronym means, but MLP, they do issue out K1s, which you'll have to report them on your taxes, regardless if they're in a Roth IRA account. It can give you a little bit of difficulties there, so you may want to speak with a CPA if you are getting K1s and you are holding MLPs within your Roth IRA. So next, I came on down here and really nothing in here. So I'm going to go ahead and minimize company basics. Now, we are left with 70 stocks out here that have been growing and paying out dividends for the past 25 years, and they have dividend payouts below 60%. So that is basically my first qualifications, and I have 70 securities. Now, with these 70 securities, I then went and I pulled up my handy dandy screener here. Let's go ahead. I'm going to load this on my other screen and then punch in a few of these ticker symbols, and I'll go ahead and show you just a few of the process here. So I'm going to go ahead and punch in just a few of these just to give you an example here of how I screen these specific stocks. So I'm going to go ahead and enter Triple M, Franklin Resources, GPC, NFG, T-Row, Nucor, BKH, and SON. So I'm just entering a few in here, and I'm going to go ahead and show you the process of how I eliminated a few of these. So starting first with Triple M, I went with just a 1 year period. I went ahead and put in the price and the starting yield. So for the year, when just kind of looking at the graph, first thing I look at is the yield trading above the price for the current 1 year period. And currently, Triple M is offering a starting yield of 3.02%, whereas in the past, if you look at the 1 year period, Triple M was mainly down here near the 2.4 to 2.5 starting yield, and the price was higher than $210 for some of its peaks. It's now trading at $183.04. I could also put in here the 200-day and the 50-day moving average just to kind of give you a visual look here of how far this stock has really fallen and how fast. This is just a straight waterfall. I just went whoosh and down, and it's been having, the market out there has been having volatility due to the trade war, but this was mainly caused by their earnings. So here you can just see for the 1 year, it's now trading below that 200-day, 50-day moving average. Yield is trading above the price. Just that's my quick knockout. Here I look, is the price trading above the yield? Yes. Is it trading above the 250-day moving average? Yes. This one, it's not currently trading at what I feel is a current value, so I skip over it. No, it's no harm to the company itself. I am just looking really quickly, thinning out stocks that could possibly be at a valuation. Here, Genuine Parts. This is offering a starting yield of 2.89, which does put it above its current price. I'm going to go ahead and just remove 50-day and 200-day just to kind of, okay, so that didn't change anything. I just wanted to see if it would adjust here. So Genuine Parts is trading below its 50-day, 200-day moving average, and you're getting a starting dividend yield of 2.89. And just a few months ago, actually, we can see here that this company here, GPC, was trading at about $115, and it may have missed earnings. It may have had the volatility here, but it has fallen and it has spiked its dividend yield up. It's not at its highest point for the year. You can see here that this company is kind of an awkward pattern. This one looks like it mainly just sort of trades sideways here. You can see here for the most part this company does trade about this $85, $90 range, and it basically just has trended sideways for the past 10 years. Okay, so from 2015 you can see that this company really hasn't gone anywhere. You've mainly just trended sideways. You've had your dips, you've had your buying opportunities when it does fall below that 200-day, 50-day starting the price, and you were able to get these higher yields of around 2.89, 3% starting yields, and then that price sort of comes up. So it has a pattern here where it falls nearly to $80 and it has some highs of nearly 115. So currently, when I'm looking at just this period here, you have room to fall. You have about $20 of room to fall, and you really only have what? I'm going to look at the 1 year period again here, and your high is maybe 115. So you have more opportunity here to fall down into that $80 range into the future than it really to climb higher. It has that ceiling here, and it just isn't going anywhere. While it does have a starting yield of 2.89, it's not the highest, and it does look like it has a ceiling here. Here, quick look. Price 200-day, 50-day, all over the current yield. I'm going to go ahead and skip over that. T row here. I quickly look at this here for the 1 year yield is over the starting price, but the price is trading both above the 200-day and 50-day moving average. So in this example, I may want to look into it. I made a video back in November, December as T row, one of my 5 stocks to buy. And you can see here that it's been an uptrend here. I never got that buying opportunity to buy into it. And it is on my watch list. It's been on there for a while. I would like this one to really come back down into that $90 range, but I don't believe it will give me that opportunity. So I'm going to go ahead and remove that one. It's still part of my list, and we're going to look at this here in the end. Here, Nucor, yield over price. Here, Black Hills, price is trading way above the yield. If you had bought this sometime in 2018, you can see a starting yield over 3.2%. And some highs of maybe 3.3, 3.4. And now if you're the buy into this, you're getting at all-time highs. You're getting above both 200-day, 50-day moving average, and you're only locking in a 2.62% yield, which is the lowest point that you could have bought this stock in the past year. And this is probably one of the best performing, this price here. Now you're hitting it probably all-time highs here. It beat out 2017 highs, and now we're just at all-time highs over the past 10 years. So not a company that I would say is a value at this time. Sudoku here, if we're looking at it for the year, again, all-time highs, both over 200-day, 50-day, and starting yield, if you look at it for the 10-year period, it's now trading at all-time highs across the board for the past 10 years. Okay, so that is basically my whole process of elimination and how I eliminated this list of 70 stocks all the way down to just these 13. Now, these 13, we have Chevron, Nucor Corp, Leggett & Platt, Hormel Foods, Eaton Vance Corp, Community Trust Bank Corp, T row, Cole & Frost Bankers, First Financial Corp. You can see a couple financials in here. Target, Genuine Parts, WW Grainer Inc., and Tanger Factory Outlets. These are sort of a very selective pair here. Now, besides trading with a yield above the price, actually Chevron here actually broke out on the day. It was trading below back when I had looked at this chart just on Friday. Okay, so I believe it's Monday, Tuesday now, so the price probably has came up just a few bit. I'm going to go ahead and eliminate that one. It's probably still a good opportunity for Chevron, but I'm going to go ahead and just remove it from the list. So Nucor, here we're offering a starting yield of 2.75. Now, another metric I use on these is taking a look at its revenue, net income, free cash flow over the past 10 years. And I went ahead and looked at it with a percentage change. So here we're looking at rising revenue, rising net income, rising free cash flow. Leggett & Platt, we have free cash flow here being low for the 10-year period. Now, free cash flow, it's important, but it's not one of the most important. I also look primarily at revenue and net income here. So it's net income up 681% over the past 10 years. It's revenue up 25.95. It's free cash flow. Let's Leggett & Platt. Ticker symbol LEG. I forgot what exactly they do here. They are a home furnishing and fixtures. So here, if we're looking at just a quick summary, Leggett & Platt engages in the design and production of range of engineered components and products worldwide. And it has its 4 segments here: residential furnishing, commercial fixture and components, industrial materials, and specialized products. Okay, so you can see here, they may have had some acquisitions, which have caused that free cash for the fall, but kind of moving on. Hormel Foods, all positive there, free cash flow, net income, and revenue all in positive movement there over the past 10 years. Eaton Vance, all positive. Community Trust Bancorp, all positive. T Rowe, all positive. Cole and Frost Bankers, all positive there. First Financials Corp, all positive. Target, all positive. Genuine Parts & Co., all positive. W.W. Grainer, all positive there for the past 10 years. And then we have Tanger Factory Outlet. Here we do have net income. This is a real estate investment trust, so you can't trust their net income because, real estate, they like to they take deductions against their net income, so it lowers their taxable income. So here, I just want to kind of avoid, not really look at that one specifically, but that was one of the things here. Was I looked at the revenue, free cash flow, net income. Again, these are all growing and paying out dividends for the past 25 years. They're all trading currently lower than their 200-day and 50-day moving averages for the most part. If you may not be, we'll take a quick look here at the price in comparison to their 200-day and 50-day moving average. So here, I do not. Oh, I have the percentages. That there. Now it fixes that. So here, below that 200-day, 50-day. Below the 200-day, 50-day. So blue, we want blue on the bottom. That's just showing you that it's dropped below the 200-day and 50-day moving averages. Here, just slightly above the 50-day moving average. T row, this one has actually popped up higher since December. So, do a little bit more research. Decide for yourself if you believe it's at a good value opportunity. Again, I liked it around that $90 point back in the past, but I didn't buy into this one. I wanted to build out a little bit more financial. That's a regional bank there. Colin and Frost here, it is trading above that 200-day, 50-day. First Financial below that 200-day, 50-day. You can see here, this is just a 10-year graph. So you can see that most of these here, all of these here, do generally have a upwards movement direction, again, because that's their financials, their revenue, their free cash flow, their net income generally just moves, and over time these companies become more profitable and their price just follows along. So here, that's just the remaining ones. Now, Tanger Factory Outlet, this is a bit of a wonky one. Now this is a real estate investment trust. We already kind of hit that one on the head. I wasn't sure if they had actually done a stock split. I didn't see any stock splits here in the period. You can see that the last one that they had was back in 2011, and it's just been on a downtrend. Now this one is a mall chain, so here we can see the company currently owns 29 centers in 21 states, coast to coast, totaling approximately 8.4 million square feet of gross leasable area. Tanger owns 50% interest in 2 centers containing approximately 667,000 square feet. So it's a REIT. Let's check with your accountant. But it's in the retail sort of mall area. And you can see that they've been kind of having some issues here lately, which has caused that price to fall from highs of $40 to now $18.85. And again, if we're just looking at here, just within the 6-month period here, you can see the waterfall, or just the constant just beat down until recently in May here, it's been on an uptick. So it may have found its bottoming out point. This could be a risky buy the falling knife, or it could really play out in your favor when you're locking in that 7% dividend yield with 25 years of dividend growth. Now, other factors here that I looked at were forward PE, price to book, price to sales, and we'll take a look at return on invested capital here in just a minute. Okay, Nucor. We're buying this book value 1.7. We're buying a price to sales of 0.69. Nucor here, ticker symbol NUE. This is a steel and iron, basically an industrial sort of company. So with President Trump coming out here with the infrastructure in the future, this company is a maker of steel and steel products. The company operates in 3 segments: steel mills, steel products, and raw materials. So if you're thinking about infrastructure here in the next 2 to 5 years, this could be a very strong buy. Dividend yields of payout of 20.9. Dividend growth for the past 45 years, you're getting a starting yield of 2.78. Again, we've looked at the fundamentals of this one for the past 10 years here. You can see that its revenue, net income, free cash flow has been growing year over year. And if we want to take a quick look at its common stock payout here, it pays out to its shareholders only $897 million of $1.81 billion of free cash flow. So It's not at any risk as far as payout ratio from earnings or free cash flow. So that's just a quick one there I'd like to share with you. The next one here is, I'm going to go ahead and bring back price to book, forward, and PE. So again, we saw these ones very low, both of these below 3, and its forward PE at a 9.59. Leggett and Platt, we have a price to book 4.5, but this is a sales driven business. That's a 1.2 with a forward PE of 16.21. Hormel Foods, bunch of canned food, spam and such. Here we're getting a price to book 3.7, price to sales of 2.2. It's a sales driven company here. PE 21.72. This could be a little bit high. Eaton Vance, here we are, price to book 4.4, price to sales 2.9. Not 100% sure. What was that? Eaton Vance, this is asset management. So in that financials, 38 years of dividend growth, low payout 43.6, and so on. Community Bank Corp, again there, it's financial. So financials, you want to look at the price to book. Anywhere below 1.5 is generally pretty positive. 1.5, 1.7 and below is generally good for financials. So here, 1.3 on the price to book. T-Row, we're looking at a 3.9. T-Row, again, it's a little bit different out there. It's a financial, but it's a regional. Cole & Frost, here we're looking at a 1.8. First Financial, we're looking at a 1.1. Target, a sales-driven company here. Sales, price to sales, 0.53. Price to book, 3.4. Genuine Parts, sales-driven company, 0.78. WW Greener, not 100% sure. Let's take a quick look. GWW, Electronic Wholesale, very close to my other company here, Tatron Components. It's another electronic wholesaler, has been going crazy. I'm up 300% on that one, but I only hold 2 shares, so it's really nothing there. Price of sales 1.4, and then finally we have Tanger. Now this is a real estate investment trust, so again, take these with a grain of salt. But when I was doing a comparison here to ticker symbol O, which is another real estate investment trust that a lot of investors like to look at, here we can see PE in the 50s. We can see price of sales in that 15 and a price to book in that 2.6. So just kind of comparing it to some other similar company, real estate investment trust. It may not be the same. I know EPR is another entertainment properties trust, which is sort of in there. So here we can see 8.3 for its price of sales and 2.0 for its price to book. Removing that one. Next, I looked at return on invested capital. So how much, with your money that you're invested in the company, what can they turn your money that you're invested into them with? Here, that is known as your return on invested capital. So Nucor, this is that steel company. It gives you a return on, you invest in the company, they make a return of your invested capital by 17.68%. Leggins and Platt, 11.55. Hormel Foods, 15.42. If you want to do a comparison here to Johnson & Johnson, for example, let's do a comparison here to Johnson & Johnson. Johnson & Johnson has a return on invested capital of 15.78. So that's just a pretty good baseline. When you're thinking of a dividend company out there, and some big known dividend companies, you're thinking of Johnson & Johnson, ADP, maybe Procter & Gamble. They don't have a whole lot of growth, I don't believe. 12.77. So just these three just kind of give you a range of what you want to look for. Anything with a return on invested capital over 10% is generally a well-run company. You're able to invest cash, and they're able to turn it into a really good return there. Community Trust, I went ahead and kept this one in there because it was very close to 10. I just rounded it up there. T-Row, 30.67. Assets, colon, 12.92. First Financial, 10.2. Target, 12.97. Genuine Parts, 11.75. WW Greener, 18.52. And Tanger Factory, again, this is one, if we can bring in O here, let's bring in O as our 2.71. So you can't really trust return on invested capital. I forgot what the, I don't know if I have it in here as far cash conversion. Now, I don't think I have the metrics in here to really measure real estate investment trust as much as I should. I should probably get those in here. Cash conversion, return on invested capital, operating income, and quarterly expenditures. But those are the 13, I believe 12 now. I think I knocked out Chevron. If you guys would like to take a look at Chevron as well, it made the list. It had really good CVX Chevron. It had good financials. When I looked at its revenue, free cash flow, net income over the past 10 years, I believe maybe I just didn't remove it. Okay, so it may just, I was supposed to remove it, but I just did not remove it when I initially started this. So those are the stocks here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 stocks there that are all trading at fairly values. Now the company here that's grown and paid out dividends the longest is Genuine Parts, ticker symbol GPC, 62 years there. You can do a quick pause the video, take a quick look here. Auto Parts Wholesaler. Next we have Hormel Foods here, 52 years of dividend growth, 48% payout ratio, starting yield 2.12. Target 51 years, below 50% payout ratio, 3.37 starting yield. WW Grainer, 47 years, 33.9 ex-dividend here just in 3 days. So if you're looking for an electronic wholesaler, this could be a good buying opportunity. Leggett & Platt, 3.77 starting yield, 47 years of dividend growth, 58% payout ratio. Nucor Corporation, this is that steel and iron infrastructure sort of business here, 45 years, continued dividend growth. Again, we looked at its free cash flow and common share payout. Its earnings payout here, 20.9. You get a starting yield right around that 2.78%. We have Community Trust Bank Corp, 38 years. Eaton Vance, 38. T Rowe, 32. First Financial, 32. Colin Frost, 26. Tanger Factory Outlet, 26. And that is it. So those are the 12 stocks. Let me know in the comment section below, did you like this video? I wanted to go out there, find some stocks that I believe are trading at a fairly value. Now, I went ahead and shared their revenue, net income, free cash flow, forward PE, price to sales, price to book, return on invested capital. You know, take the information that I've provided and do what you want with it. If you guys would like to go and do any more research on these specific companies, definitely go for it. I am probably going through here. I need to add some more stocks to my positions. I want to go ahead and start some more positions up. That way I have some other opportunities to begin investing. Currently I only have like 6 stocks that are negative, and I need to find more stocks to fill into the portfolio currently because I want stocks that are red. But that is it. If you are brand new to the channel, hit that subscribe button below. If you do enjoy the video, hit that thumbs up. And if you have any comments at all, drop them in the comment section below. Do you invest in any one of these 12 stocks? Let me know in the comment section below. And also, if you are looking into specific stocks and do invest in the future in any of these, let me know in the comment section. I would really appreciate your guys' feedback, and hopefully the video helped you out. Thank you all for tuning in. I will see you next time. Have a great day. Bye.